following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Thank God it's Friday. And are you guys tired of hearing about this Greek thing or what? It's like, yeah. Who cares at this stage? But they're still talking about it, and obviously it has a slight bearing seemingly on things. So, it's good riddance when that's over with. But, I think it's still possibly the shape of things to come. That was kind of a stake in the ground for, countries that are, going to have to come to, some kind of grips with reality when it comes to, what have they gotten themselves into and what have they extended themselves out to. So, again, I don't think the long term on that's over with, but I'm just kind of tired of hearing about the, the third, fourth, and fifth stages of the Greek resolution, so to speak. Yeah, I know it's somebody saying something about Puerto Rico in the den. It's just, c'est la vie. Let's keep that out of the news so it doesn't upset the market. That's the way I'm thinking that they're thinking. All right. Also, I gotta rag on something else here while we're ragging on things. This guy Zach's, he continues to amaze me. I mean, you want to read something funny? Get on their mailing list. Get an email every day. And this guy flip-flops. He writes this thing every day. I guess this, I'm not going to name any names, but it's coming out from Zach's. He writes this thing every single day, and he's flip-flopping every single day. All of a sudden, the market's going to go to 3,000 on the S&Ps, and the next day, we're in for a heavy ride down, blah, blah, blah. And now he's saying, what's that thing on Hotels.com? Captain Obvious. Putting it all together, we learned this week that it's probably best to stay away from China until it's clear. Blah, 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 Yeah, thanks, Captain Obvious. Incredible. He also, God, the S&Ps are a whole nother paragraph of comedy. All right, so let's get right into I want to look at gold really quick. Here's the December contract. This is the cool thing about these profiles. And I've got a new version of the scanner I'm going to install right now. I'm going to show you this. And there it is. And it's got some new features, and those new features are, while we're talking about gold, I'm going to just kind of keep installing this. And if you guys go get a demo of this, you're going to get the latest version of this scanner, and I'm going to point out some new features. We added a ton of them that were in Wednesday. There's some new quick nav features, quick navigation. You can edit proprietary lists that you put together. Some hover over features. Some legends have been moved around. There's some, kind of staying on the dashboard. There's some ETF changes. What else here? I'm going down the list. A couple other things, and what we're doing is, I know I've been talking about this for a while, but we're marrying this scanner into some charts you guys can get hold of very easily, starting in about a week or so, or two. Why is this not installing? Oh, I'm an idiot. There we go. All right, so while we're waiting for the new scanner to install, I just got this from one of our programmers. That's why I'm doing it here, so you guys can see it. Looking at gold, here's the daily view. And the reason we're pulling this up is because an interesting little situation for gold. As you can see, we're trading above profiles on the daily. And as we look at this, we talked about, the cool thing about profiles, and this is why I love them, is I'm not necessarily that bullish on gold. You guys know that if you've been watching the show. And we've talked about getting back down below 11, 12, 11, what is it, 11, 11, 11, 12, excuse me. Hopefully getting a daily close below there, getting back in the balanced area to look at this from the short side. You really can't play around with the fire up here now from the short side. And to be honest with you, going into the weekly view, we've got this orange bar that's prevalent. It's Friday. This is a weekly bar. And if we continue to have that stay orange, we're going to basically have a new profile Monday mornings. Now, what I'm going to do with the new scanner, I just set up some test custom lists here. That's what they are. I'm going to go in our futures section, and I'm going to go into gold. Oh, you're going to be able to drag and drop these things too, and also right click on the symbol and putting it to a custom list and all that kind of stuff. But as you see, we've got a red profile, that a red cell. That means we're below profiles on our weekly, but we've got this yellow peel back happening. At the same time, we're sitting right above profiles on gold. All right. So on the daily. And we got some green shoots on the 60. So that is a little concerning to me that we've got a new profile attempting to appear, a new demand area on the long-term weekly, but at the same time, we're sitting above profiles on our daily. And what this means is you noticed a 14 bar count. That means that we've had a change in trend in our daily for 14 bars in a row, if you notice that on the scanner. So we're kind of in no man's land up here. And what I'd like to see, basically, is I'd love to see that new profile get into force either after the close of the day or Monday morning. It's definitely going to happen on the long-term weekly. Find some new resistance areas, hopefully, that will give me some leverage, maybe a little bit higher. And then I can use two different inflection points to short this thing. So that would mean getting back down below 11, 11, 11, 12, or on Monday, more than likely, seeing this new profile, seeing some new inflection points, and having something even stronger to leverage against. So we've kind of done a little bit of a move up here. We talked about waiting patiently after we got down to the 1081 area, waiting for either a breakdown below the 1081 area to sell or getting back up into this resistance at 11, 11, 11, 12. Now, that didn't work out for me. That was a stop out, and that's cool. All right. So the breakdown didn't work. The resistance sell, the breakdown didn't happen. And thank God we were playing that game like that. We found, what is this, $40 an ounce higher. We tried to pick a battle again on the short side. That didn't work out. That's okay. Now we're going to have some new information to hopefully focus on gold. And the good news is you're going to be given that information right in the scanner. There's the inflection points, current ones. There's the ones we've been kind of talking about on the daily. And that's the way we're looking at it. Okay, there's some new features here. Okay, wow, cool. Cool. That's awesome. So I can go into the quick nav on the scanner, and I can add, blah, blah, as many different lists and things as I want to, and hit save. And then when I go to my dashboard, they're all there. So I can come in here and hit custom lists really quick. Futures, Forex, indices, dashboard, do custom sorts. Pretty flexible. We're adding some other cool features every week. Here's the Taz Says stuff, which I love. All right. Enough about self-promoting. Let's talk about something important. Let's look at our treasuries. This is another thing. This is another instrument that I'm pretty high on the long side, just like I'm pretty high on gold on the short side. 127.14, 127.11. That's been the pullback buy support area. And again, trading's about turning the rents the same way. You're going to have losses. You want to keep the risk reward ratio correct, as in risking one to make two or three or even higher. So 127.11, 127.14, that's big support on the 10-year. If that doesn't work out, you can try this trade a little bit lower. There's the 127.11, the 127.14. Don't have a lot of conflicting information on our navigator that this is not a bounce, or excuse me, a support area to buy, as you can see on our daily. So 10-year looking relatively supportish is also a little concerning for the longs on the stock market, in my opinion. We're going to go right into the S&Ps. We got a short signal last night on our automated systems. That 2085.50 held on the close below, go back and retest. There's that 2085.50. And the reason we're looking at all this from the short side again is we're looking at our breadth indicators on our S&P. Very mixed up situation. Sideways move at best with a bias towards the short side. And what's gonna happen this week is I'm gonna just kind of do a little bit of a prediction here. We're gonna have some weekly numbers fold over again. We're gonna have some new boxes appear, and we're pretty much gonna have a weekly crossover back to negative. You've got that happening on the daily now. You've got a little bit of a mixed up situation here on the 60 and the 240. Remember, the 60-minute crossover is a system in itself. So I want to show you this. Here's the crossover, most recent crossover that happened yesterday afternoon at around 3 o'clock. These are on closing 60-minute bars too. So if you use these crossovers on the 60 minutes and you set your stops and you're aware of the long-term inflection points, remember, a lot of our automated systems are looking at breadth as a kind of tie to the marketplace to be long, short, or neutral. And then we're looking at these major inflection points on our dailies and weeklies as that fence to lean against and to take, profits, targets, orient stops around, things like that. So going back to our scanner, if you get this for nothing other than getting it for the breadth indicator, the 60-minute, it's a day trading system in itself. I'm going to take out the middle ground. And when this green line crosses the red line, you go long. When the red line crosses the green line, you go short. It's that simple. All right. Be aware of those long-term inflection points. And where do you get those long-term inflection points? You get them right in the scanner, and there they are. Okay, 2060. That's that big weekly number, and that's what we've been taking profits on as the market goes down to that 2060 area. Then we got to sit still and either wait for a close breakthrough or sell resistance higher. And that 2085.50 is, again, right there on our daily upper lows, and that's been a very, very nice level to sell lately. We'll be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Just to finish up about the S&Ps, I hope you're not hearing the cricket, the so-called cricket that's somehow in this place that I'm not aware of, that Al seems to think is some magical cricket that keeps making a cricket sound. I hope you're not hearing it. S&Ps, just to follow up, just to finish this conversation, 2085.50, the same scenario, stops above. Somebody's saying they're hearing it. Unbelievable. There's no cricket here, and I got to change my whole technical setup then. Maybe it's TFNN. If anything's wrong, we blame it on TFNN. It's not me. It's just kidding. Anyway, above 2085.50, we got to put the stops up there. Again, just like we always do. And we've got to put targets down below at 2060. That's the way we're looking at this. And this is our daily. This is our 240. Remember, the short-term traders, we had another little opportunity at 2092 up there. That was kind of cool. But the big momentum trade happens when you get the momentum down below those daily infra lows. That's very powerful. Are we going to reach 2060 today? Are we going to get stopped out above 2085.50? Don't know yet. But remember, that risk-reward scenario is very cool. And it's been Betty good to us on the short side. Remember, taking stops, saying uncle every once in a while is a part of this game. Get used to it if you're not used to it. Part of the game. 1,000 points of light. Who said that? Was that Bush? Anyway, we're going to take a look at oil really quick. We're going to take a look at oil really quick. Let's see here. And here we go. Gotten back above 42. A little bit of a I kind of like the action today. Yesterday, what we did yesterday afternoon on Tom's show is we talked about the relationship between the XLE and crude oil, right? The XLE back in March this past year, we had some really cool action where the XLE was making higher lows and starting to show some green shoots while crude oil was continuing. And this is the September contract. We were a little different on I believe it was the May contract back then. We made lower lows on crude oil, higher lows on XLE. XLE started showing the green shoots. The scanner picked it all out ahead of time. And have I said the scanner's awesome? Anyway, so that was kind of the mechanism that we used before to start nibbling on crude oil, right? Same setup right now, but we got a kicker in place. What's the kicker? Higher lows on Navigator, lower lows on price action, while at the same time getting a little bit of reversal here today. Nothing to write home about. But as we go into the XLE, I'll just review this really quick. This is the deal, got some nice little indications here. The orange weekly situation, which is a new demand area, might give us a little bit of a trading range at worst, I hope. And then you got some green shoots here on the XLE, kind of, getting above breaking stride. And I want you to look at, maybe how up, down, and then we kind of break above profiles. Here's the 240. So what I'm going to do is I'm going to go into the scanner, and I'm going to go into where's our ETFs? Right there. All right, so there's the XLE. Again, the weekly, the worst of the bunch. And this is again, if you haven't used this thing, it ranks on 4 different time frames, whatever you want to choose. The ETF relative to TAS profile breadth. All right. Now you can come in here to the XLE. You can look at the daily breadth crossover. You can figure out the tie to the marketplace on it. Now, again, you go into the weekly. This is just a sick situation for the ETF. And the cool thing is now we've got the ETF price chart below. And when you come in here and snap these across, watch this. It lets you focus on the price action below while the crossovers are happening, right? So, and this is really cool to look at the S&Ps if you haven't done that. I mean, this is a ultra cool thing to have. Have I said this thing's awesome? Anyway, we're going to take a look at the XLE in general. We're going to look at the components. You know what? I'm going to find this chirping spider. At the break, I'm going to find it. We'll be right back, guys. We're going to take a look at some of the internals of the XLE, and we're going to try to figure out this crude equation along with other things.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates.
And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. I used some Decon, Agent Orange, and Fish Paralyzer to try to kill this cricket a while ago, and I think it's gone. Actually, Steve Rhodes helped me out. Took somebody smart to tell me how to fix this, and I thank him greatly. I hope it's gone. Was just joking about the Fish Paralyzer. I don't think crickets respond to that. Here we go. So let's take a look at the XLE. And what we have here is just a chance to look at the broad strokes of the internals. And what you'll see here, which is kind of cool, is you'll see a lot of yellow, I call them peelbacks here happening on the long-term red cells, which means that we're going to have some new demand areas happening. All these things, and we've got a couple of, stocks that are not doing bad at all. Without question, you guys are aware of these: Valero, Tesoro, Cimarex, again, the refiners having a heyday here. It's amazing how California, if anybody's in California watching this show, can you please call in and tell me, why gas is just, $4 a gallon? I don't know. It's just, I don't know. I don't understand that, From a business concept of providing that price, I commend them on being able to gouge people, I guess, but it's not right. But don't understand. Yeah, please, John from Philadelphia, please let me know. That's true. That's true. Okay, so I understand why it's a little higher. It should be a little bit higher, but not gouging higher. I haven't looked into that very deeply. So Anyway, so that's the situation in the XLE stocks, which obviously fold into crude oil, in my opinion, relative to that relationship we looked at before. So, be on the watch out. We could have a little bit of a move up in crude, and let's get some specific numbers on that. All right. So, how do you deal with this? I think you have to wait at bare minimum till we have a new profile appearing, or at least some yellow bars happening in the scanner on the September contract, which will give us some new support areas that we can bank against. But if you gotta, step in now, it's a little bit riskier situation. Any breakage of profiles on our shorter terms above 42.53, and especially a daily close above there, I think you could start looking at that with stops below 41.82. Where's your target on something like that to determine your risk reward? If that starts happening, I'm pretty sure we might start seeing some new profiles with some higher targets on our daily, and you've got to pay attention to that. All right, so that's the deal on that. I'm just a big fan of waiting patiently on the euro trade here to try to hammer this again on the short side. It's been a great trade. I haven't forgot the euphoria of banging it at 135.50 on that close below retrace on the weekly back in July last year. It's just been an awesome situation. I don't think it's over. You're going to have rallies. We had 1,000 pip rally from the 104 area to 114 and some change, obviously this past year. You got to be prepared for those. You've got to be prepared to take some profits and get stopped out, trying to kind of, put this in the same light as we have been doing since last year. But right now, Juan Villegas from South America pointed out a really good point of contention here, 112.07, 112.08. That's a POC and a wide weekly profile, and hopefully stops above there. If that doesn't work, we can try it again at 114.66 up there again. But getting back below 109.50 is going to really allow me to get pretty convicted about this short trade again on the euro. All right, Peak D is asking for me to look at, this is the, let me see if I can get these right on e-signal. Works. It's .A on e-signal. BRK.A. So Berkshire Hathaway A shares. Yeah, I was just making sure it was the right symbol on here. So your main question is just kind of give a dissertation on this one as far as I see it, or do you have a specific question on this one? Okay, cool. All right, well, here we go. I haven't kept up with the fundamental news as much on this stock. I know it's been, they've spent some cash. What's their cash reserves? They're in the insurance business. I'm not as well versed on this as probably some folks. Technically speaking, it's 209,997. That's where you're putting stops below on the long side. Am I a big fan of going long stocks right now in general? No. So I've been kind of staying away from looking at some instruments that are strong, trying to buy strong stocks. I've been more interested in finding weak stocks that are showing their hand that we could take advantage of if the market pulls back. So that's, put a gun to my head and force me to buy something. I don't think you've got a bad situation here, but you got to put stops below 209,997 on Berkshire Hathaway A. All right, cool. We're good on that. Okay, so let's take a look at some stocks that have recently had earnings, and I want to kind of show you how some of the levels, so to speak. This is a Shake Shack. Obviously, this came out August 10th. Still not doing very well, but I wanted you to see, how these inflection points, and again, this is kind of the Wild Wild West trading this thing. It's extremely volatile. But now you're kind of getting into a different situation where now you could look at 58.94, 50, 59 as resistance. You hope we get a rally back up there. again, this is kind of the Wild Wild West. I just wanted to point that one out just to be able to use some of those inflection points. Disney, this is another one. We kind of talked about that 105 area, which was a big area. And the reason being, bottom of the profile caught a really good bounce there. But now we've kind of confirmed that we don't want to be anywhere near the unfair lows of this current box, which has appeared above price action, which is bearish, as you know. And now, obviously, the range has been set by these unfair lows around 105.02 and unfair lows on the current box at 111.38. So what do you do with this now? Considering, and this is the daily situation, considering that I'm not that bullish on the stock market, I'm looking at this as something that actually could go sub 100. It's a relatively high price stock, all things considered. So, make sure your share amounts are monetized properly with your trading plan. But I think we could head a little bit lower. Stops definitely right now above 111.38. But if we can get back down below 105, I think this thing could step on the gas pedal pretty quick to meet 100. And there's a lot of external factors also that I'm factoring into that. Price line was on the 5th. Let's just look at this and see what we're doing here. I'm looking in the den. Would I short BRK? Actually, no, I would not. I think there's better shorts out there. So that's what we're trying to do. It's a great question, actually, from Peak D. A lot of times people look at stocks that are just completely going in the stratosphere or going down in a hole and think that they've gone up too high or gone down too low. When you're doing a relative strength trading game, I guess it will be a little bit more boring than trying to short something that's on fire and, all the possible upside and excitement and downside that goes along with that. But using a relative strength trading mindset where you have a market bias towards the short side, you're looking for stocks that are not cooperating with any moves up and showing their hand. Those are more boring situations. But, successful trading is supposed to be boring. Somebody told me that a long time ago. And, those can be relatively painless if the market doesn't go in the direction you want it to. And those stocks still continue to show their hand as, not stocks that want to go up. And that's what we've been doing literally. I hate to sound like a broken record, but that's what we've been doing literally since first of the year. With this mixed up breadth situation, we've been trying to find resistance areas to sell in the index. And we've also been trying to find, when we have rallies, try to find out what's identifying itself as a short candidate. And that identification process is right here. So I go into the dashboard. I'm going to look at my S&Ps and I'm going to do some sorts. And it's going to continue to more than likely show me the same usual suspects that I continue to look at here. The Best Buys of the world, some financials are starting to appear on here, which is kind of interesting. CBS Corp, just FedEx is, oh my God, yeah. Fluor Systems, Gap. This has just been the eternal short. And again, okay, Logan, I didn't really need to see this to know that Gap's Incorporated's getting killed, but it gives you the inflection points to pay attention to. And a lot of times, what I'll do in situations like the other day, I'll come in here and go, all right, it was trading to below the box, but it's kind of rallied back up into the top of my daily profile. Boom, here we go. Capital One. So these are stocks that are kind of down, but they kind of just somehow rallied back up into the resistance inflection point, showing giving itself a little bit of a pop to take advantage of. Kinder Morgan, Tyco International. Let's take a look at Tyco just to kind of put that on the screen. All right, so what did it do? It said, okay, we've got a stock that's, obviously not doing that well on a relative scale, Tyco, but it said, hey, you know what, we're sitting in the vicinity of our unfair highs here on our daily. Now, I said, okay, let's find stocks that have rallied up and met tops. But as you can see with the price action on any chart, you don't need our charts or these indicators on a chart actually to know this. This is one that it just told me two things. below profiles and near the vicinity of a top of a daily. So I'm looking at this like actually as somewhat of a change in tone. To get short this, we'd have to get back down below that inflection point 37.38. We've had a little bit of a breakage, technical damage here. And what I like about this actually is, I'm not a big fan of going long stocks right now, but this is kind of shown the breakout and the retest. You're going to have to wait a little bit on this one. I mean, this is actually kind of looking a little bit longish, to be honest with you. So, but again, the scanner kind of put it on the screen, and that's nice that we can see opportunities like that. Capital One, COF. Let's take a look at that one. All right. So again, the financial stock, which, if you were looking at, the scanner all along, we kind of come back and retested this week, which is really, really cool. From the short side, we retested pretty much to the tick 83. We've reached a high this week of 82.67. I'm going to call that satisfied and come off of it, which is really, really nice. And looks like to me that, in the long term, I love it. I love it because I think the market's going to come off more. And I think this is kind of like the breakdown, the earnings, to go back and retest, consolidate, spin a little bit, build the cars, as Tom would say, and then maybe head south again. So this is our daily situation that would confirm a lot. It put it up here because, this had that little reversal the other day, and, couldn't really get completely out of its own way. So yesterday, this is the deal. You've got two inflection points, 80.66 and 79.23. You'd really like to see this get clean and clear below 79.23, but you've got some opportunities here around this 80.66 area to start hitting the short gas pedal. And then when you get the confirmation below 79.23, I think you could actually maybe even add to that position. Where are your targets down south? You're going to have to wait for some new profiles to appear, and they're going to be given to you right in the scanner. All right. Take a look at ExxonMobil. Let's just kind of throw this one up there. Is this still the biggest market cap stock in the S&P? Didn't we confirm it? I think. Which one is? I'll get that on break. Sorry, I don't know that off the top of my head. I know it's in the top one or two. Apple. I think ExxonMobil's the top one in the S&P. Apple's in the NASDAQ, I believe. Anyway, heavily weighted stock. Here's the situation. Before, when we were talking about, trying to find XLE stocks to buy, when we were looking at that relationship between the XLE and crude oil before, ExxonMobil wasn't one of those stocks that was the ripe opportunity. We're going to talk about this a little bit when we come back and how to trade this instrument moving forward.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. We're finishing up with ExxonMobil, and what do you do with it now? We're trying to bring out the points that it was kind of the weaker on a relative strength trading scale of the XLE components before, and we actually were looking at inflection points to sell on this 90.22, and then we got down below our long terms at 83.76, and that's been another opportunity. So here's the daily situation. And this was, the earnings were out on the 31st. I've got marked here. And it's actually over 3% of the S&P value. So this is the number one stock without question. And here's the situation here. I don't see any reason to really get long this thing right now. You've got other better opportunities. You don't have anything really telling you that it's time to start nibbling with this. I'm going to go back to my dashboard here, and we're going to look up ExxonMobil really quick. XOM. There you go. And as you can see, just, no green shoots yet. We might start having some on the 240s, but you'd really like to see some yellow peelbacks here happening on the weekly or daily. And then we could possibly go back and retest 81 and maybe even 83.76. So that's kind of the way I'm looking at that. I think crude oil probably will have some opportunities to go long here. We looked at this earlier. I think, this, I don't know if this was the washout move of all times we were looking for here. Remember, a lot of these markets, just like Sherman going through Atlanta, Charleston, Savannah, he made it so painful that the nation kind of did a key reversal. And again, Sherman's not a big name down here, but until the stock makes it, or the instrument makes it really, really painful, a lot of times it won't turn around. There's no free lunch like, hey, here's the tick that everything turns around. Usually there's some capitulation, as they like to say it in the stock world. So remember that. We could have one of those. Be prepared for it. Keep your stops in. Let's take a look at November beans. All right, this is one we kind of had our eye on from the short side. Recently, even as of yesterday, we talked about 923.5, giving yourself a little bit of noise factor around that. This is our 240s. 908, 910, that's a big number down below. We're about 5 cents a bushel away from that. Obviously, that report came out and not been bitty good to the price of beans, especially new crop. But I think we're going to head lower, and I think we're going to end up settling in the $8 range. And earlier this year, I had talked about 825 beans. I still think that's possible. Remember to put your stops in along the way, folks. Okay, just to kind of finish up with the S&P's, got about a minute left. I'm looking at 2085.50 again. If you're catching the show late, that's the imaginary line for me. I'm putting the stops above, as always, around that inflection point. It was really cool the day before we kind of got into this 240-minute unfair high, 2092, 2093. I got stopped out of the 2085.50. I'm pretty stingy. Then I tried it again here. But right now, you got 2060 down below. That all-important weekly unfair low number, and you got 2085.50 up top. Orient stops around there. Looking at this only from selling resistance and taking off some targets, or taking off around targets around 2060. NASDAQ, really quick, got about 10 seconds. Here we go. A little bit more bearish looking chart. Relative strength, relative weakness. This is the one to hit. Guys, you've been great. Have a good weekend. Have a good day trading. Larry's next. And hit me with an email if you guys feel like it. I'll try to answer the questions. We'll see you.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.